Blackstone is the biggest private equity investment firm in the world and just recently announced its first quarter results. The main highlight for me is that they have now about 200 billion of dry powder ready to be invested. Then on top of that, another highlight for me is that they just had their most successful capital raise ever for a new global real estate fund. They managed to raise about 30 billion, the biggest ever for them. Now the natural next question is, what are they going to do with all this capital? What are they going to buy with it? And I think the answer is REITs. They've been buying a lot of them in the recent years. Last year alone, they bought about 30 billion worth of REITs. And just a few weeks ago, they bought yet another one in the UK for about $1 billion. The reason why they're investing so heavily in REITs is because they essentially allow them to buy real estate at a steep discount to its fair asset value. In recent years, industrial properties, apartment communities have seen their rents rise very significantly. Their values have grown. But despite that, the share prices of REITs have declined very significantly. In 2022 alone, REIT share prices dropped by about 30%, and as a result, now it's not uncommon to find REITs that are priced at up to 50% discounts to the fair value of their assets net of debt. Now, I run a small REIT investment firm, and so I'm very familiar with these opportunities, and in the recent years, we've been able to profit in many cases from these buyouts by buying the REITs ahead of Blackstone. As an example, we bought shares of American Campus Communities. Later, we also bought shares of PS Business Parks. Both of these REITs got bought out by Blackstone and they paid us large premiums relative to what they were trading at in the public market. Today, we are again positioning our portfolio to profit from the expected buyouts in the coming quarters. And today's video, I want to talk about two specific REITs that I think will make ideal buyout candidates for Blackstone. But before I get into it, if you could please like this video, it will really help me a lot. Thank you very much. So the first REIT that I want to talk about is a REIT called STAG Industrial, ticker symbol STAG. This is a REIT that invests in industrial properties. As its name says, industrial properties have been some of Blackstone's favorite property investments in the past years. Just a few weeks ago, they bought yet another industrial REIT in the UK, and I think that STAG could be next in line because of all the following reasons. Reason number one, its valuation is discounted. This is one of the cheapest industrial REITs in the US, trading at right around a 15 times FFO and a 20% discount to its net asset value. In comparison, many of its peers are trading much closer to their NAV and at closer to 25 times FFO, so this is much less opportunistic for Blackstone. Then reason number two, it has attractive organic growth prospects. Despite being discounted, STAG is growing at a steady pace because its rents are today deeply below market, and so as leases expire and re-signs new leases, it's able to bump up rates by about 20%. This is attractive for Blackstone because it provides it a bank of growth for the future years. Then reason number three, its size. Many of the industrial REITs are too big for buyout. Prologis, as an example, owns about 200 billion worth of assets. This will be way too big for Blackstone, but STAG isn't too big. Its market cap is right around 6 billion. This is about similar to the size of American Campus Communities, which we also used to own and got bought out by Blackstone. Reason number four, the balance sheet. Today, the leverage is low at 35%, and so this could provide an opportunity for Blackstone to add a bit more leverage to bump up the cash flow of the REIT. Reason number five, STAG has a unique value add strategy that could have some synergies with some other portfolios of Blackstone. STAG is famous for buying properties that suffer some issues. As an example, they might have short lease terms or high vacancy or some deferred capex, or they suffered from past poor management, and so STAG will buy these assets on the cheap, improve them over time, bump up cash flows and create a lot of value. This strategy has been especially lucrative in the Class B segment in secondary cities, and this is something that Blackstone is not doing a lot today, and I think that it could learn a lot from STAG's management team. Final reason, the management. I think that STAG's management is very shareholder friendly. At the right price, I think that they will be willing to let go of the REIT, and so that makes it a good target for Blackstone as well, because many management teams are very reluctant of letting go of their jobs, and so it's very difficult to target them for buyout. Just recently, I talked with the CFO of STAG Industrial at the City Global Property Conference. I posted a video on this channel, I'll put a link somewhere here on the screen, and so the feeling I got from this discussion is that they're really looking looking out for the best interest of the shareholders. But with all that said, I wouldn't buy Stag just because of a potential buyout. I think that even irrespective of buyout, this is an attractive investment opportunity today because I think that the REIT is undervalued relative to its future growth prospects. At today's valuation, you get paid a nearly 5% dividend yield. I also think that the REIT is going to be able to grow at a rate that's greater than 5% each year. And then on top of that, you add 20 to 30% upside potential as it reprices closer to its peers over time. And so that makes its risk to reward very attractive. Then the second REIT that I want to discuss here is called BSR REIT. This is a REIT that specializes in apartment communities. This is perhaps the second most popular property sector for private equity players like Blackstone. They like to buy apartment communities because they generate very steady cash flow that's steadily growing over time, especially in the sunbelt markets. But unfortunately today, apartment communities are very expensive in the private market, trading at very low cap rate. And so this is why these private equity players have now turned their attention to apartment REITs, which often trade at much higher yields than the apartment communities themselves because their share prices are discounted. Blackstone has bought quite a few apartment REITs in recent years, and I think that BSR could be next because of all the following reasons. Reason number one, its portfolio is mainly located in Texas. Private equity players really like to invest in sunbelt markets today that are enjoying rapid growth. A lot of companies are moving from coastal markets like California and New York into sunbelt markets because there are a lot of incentives. Often there will be tax benefits, much lower cost, good access to talent. And so by simply moving from one market to another, you can increase the profits of your company. This has pushed a lot of companies to move into the sunbelt markets. They're bringing jobs with them, and then people follow jobs. And so this is leading to rapid rent growth for apartment communities in many of these markets. BSR just happens to be mainly invested in rapidly growing Texan markets. And so this makes its portfolio very desirable for private equity players. Second reason is the valuation. The latest net asset value per share of BSR is around $22, but its latest share price is around $13. So there you have a 40% discount for very desirable Texan apartment communities. This is a great opportunity in my opinion. A private equity player like Blackstone could offer them to buy them out at, let's say, $18 per share. That would lead to attractive upside for shareholders, but they will still get the communities at an interesting discount for them as well. Then reason three again is the size. This is not a REIT that's too big for buyout. Some of BSR's peers like Avalon Bay might be too big, but BSR certainly isn't, with a market cap that's about similar to Blackstone's latest acquisition in the UK. Reason number four, the balance sheet. BSR has a loan to value of 35%. Just like Stag, this is very conservative. If Blackstone wanted to, it could increase the leverage to buy more properties, and so this makes it also desirable for Blackstone. Finally, the management is very well aligned with shareholders. They are some of the biggest shareholders of the company themselves. They have a lot of skin in the game, and so I think that their equity stake has a lot more value than the salary is to them, and so they surely want to maximize this value for themselves and that of other shareholders. So this makes BSR an ideal buyout candidate in my opinion. The buyer could be Blackstone, or it could also be another apartment REIT that wants to expand in Texan markets. But irrespective of a buyout, once again, I think that BSR is an interesting investment opportunity here because you get a near 4% dividend yield. The company is buying back shares, it's creating value for shareholders, it's growing the cash flow by bumping up rates. And so I think that you have a clear path to double-digit total returns here. And then on top of that, if eventually we get a repricing from the share price closer to the NAV, if they manage to close this gap, there could be very significant upside. The bottom line here is that unless we see REIT share prices recover, I think that we're gonna see many more REIT buyouts in the coming years because private equity players are sitting on more cash than ever before, and REITs are simply some of the best investment opportunities for them. I've positioned my portfolio to benefit from these buyouts. Stag and BSR are two good examples of that, but there are many more such opportunities in the market today. And if you want to access my entire REIT portfolio, my real money portfolio, feel free to join my REIT newsletter for a 2-week free trial. I'll put a link somewhere in the description of this video. And otherwise, once again, if you enjoyed this video, please consider liking it, subscribe to the channel. That will help me a lot. Thank you very much. See you at my next one. Bye bye.